Welcome to Coin Pulse News. What a whirlwind of events we've witnessed recently. Does anyone remember that incident with the US Securities and Exchange Commission, or the SEC as it's more commonly known? The one that sent Bitcoin's price on a roller coaster ride? Yes, that's the one. Let's dive into it and unpack what really happened. On an otherwise uneventful day, a tweet popped up on the SEC's Twitter account. It was around 4 p.m. Eastern Time, and the tweet claimed that the SEC had approved the first application for a Bitcoin spot exchange traded fund, or ETF. The crypto world was abuzz with excitement, and Bitcoin's price reflected this, briefly soaring above $47,500. But alas, the celebration was short-lived. SEC Chair Gary Gensler quickly stepped in to set the record straight. The news was untrue. The SEC's Twitter account had been compromised. Gensler took to his personal account to share that the SEC had not approved the listing and trading of spot Bitcoin exchange-traded products. In a twist of irony, it was revealed that the SEC, the very agency that had been cautious about approving a Bitcoin spot ETF due to concerns about market manipulation, had fallen victim to that very threat. The SEC's Twitter account had been hacked. The culprit, still unknown, had managed to gain access to the phone number the SEC uses for its account verification. And it turns out, the SEC had not enabled two-factor verification on its Twitter account. This incident sent shockwaves through the crypto world, with many pointing out the double standard. Bitcoin's price, which had briefly risen on the fake news, fell back down, dipping below $45,000. A wave of liquidations followed, indicating the impact of such news on the market. This incident highlighted a few key points. Firstly, it underscored the susceptibility of nascent, unregulated markets to malevolent actors. Secondly, it raised concerns about the security measures in place for regulatory bodies and platforms. And lastly, it highlighted the intersection of market dynamics with news, both real and fake, and the influence they have on the prices of cryptocurrencies. But wait, there's more to it. This incident wasn't the first time fake ETF announcement news has moved markets. An erroneous report by Cointelegraph in October had a similar effect on Bitcoin's price. Both episodes reveal the immense anticipation for the approval of a Bitcoin spot ETF and the potential influx of capital it could bring to the crypto space. As we look to the future, it's important to remember that while exciting, ETFs are standard investment products, not miraculous panaceas. The hype around the ETF announcement shows the desire for a positive narrative to push Bitcoin higher. That, rather than the actual impact of ETFs, may be the more significant takeaway here. The demand for positive news in the crypto space is huge, especially considering the falls, crashes and scandals of the past 18 months. So, while we wait for the real announcement, remember to exercise caution, conduct due diligence, and rely on trustworthy sources of information. In the world of crypto, things can change in the blink of an eye, and as we've seen, even non-news can move markets.